Now guys, as usual, we are going to discuss the agenda of this S&P 500 weekly technical analysis, that is for the week of September 26th, 2022. That is from September 26th Monday to September 30th Friday. So the first point on this, the agenda, is the S&P 500 technical analysis on the weekly chart. Why the weekly chart? Because we want to look into the big picture in order to confirm what is going to happen on the daily basis. Then the next part is the recession and the Federal Reserve board meeting. So yesterday there was the board meeting of the Federal Reserve, okay, and then the recession. So they have partially discussed the recession, but I will discuss the recession in very detail because we are already in the official recession, okay. And I will also discuss the European market, okay, the Bank of England, okay, that decision. So that particular thing, so we will discuss in the recession and the Federal, and also in this part, okay, I will tell you that where we are heading to. So earlier it was 3,500, okay, now we are heading to like 3,000 or so, okay. So that I'm going to discuss in the second part. Then comes the third part. So in the third part, I will discuss the support and resistance levels for the S&P 500. Now because the S&P 500 has breached the standard support of 3840, this means that as of now any reversal will be limited to 3840, and now there will be a fall and we will be heading to so first we will breach the 3,500, the psychological mark. Then the SP500 will hit the high that it made in the February or in the December 2019 or in February 2020, okay, before it came down heavily. And thereafter this the 3,000, we will discuss the 3,000. So I will give you the support and resistance levels. Then we will discuss the dollar index, bond yield, and the bearishness. If you are following the dollar index, or if you have subscribed to my channel, okay, so in last 2 or 3 weekly technical analysis, I have mentioned the dollar index and its impact on the stock market. And yesterday the dollar index, it made an all-time high. So we are going to discuss the impact of the dollar index, okay, in the coming week on the overall stock market, on the S&P 500, Dow Jones, Nasdaq, okay, and each and everything. Then the bond yield. Again, now the bond yields are further going to increase and they are heading to 5%. So as of now, yesterday the bond yield, okay, it was 4.268% or something, and now we are heading to 5%. This is the same thing that I've discussed in my weekly technical analysis, and also this is the same thing that I've told my members in the daily analysis, in this the daily analysis video on September 20th, that we are heading to 5%. This means that more bearishness will be there in the overall stock market, in the S&P 500, in all of the indices like Dow Jones and Nasdaq. Thereafter, I will discuss the S&P 500 technical analysis on the daily chart. So weekly chart means the big picture, the Hawkeye, and then the daily chart. Daily chart means what is going to happen, okay, on the daily basis. Monday, Tuesday, Wednesday, Thursday, Friday, means up to September 30th, 2022. So what is going to happen in the S&P 500 up to September 30th, 2022. And then finally, okay, I will give you the probable movement of the S&P 500 for the coming week. So I will tell you that what you can expect in the coming week and how most likely how the S&P 500 is going to behave from Monday, that is from September 26th, to Friday, that will be September 30th. So that will be there in this the probable movement of the S&P 500. Now guys, once again let me clear this thing that this video is going to be a bit lengthy. So if you see that in all of my weekly technical analysis, because my technical analysis, okay, these are quite lengthy but are very informational. There is a tons of information that you're not going to find anywhere else, okay. So if you see that I've created multiple sections. So whichever section you want to skip, you can skip. Whichever section you want to watch, you can watch. And this will also help you to rewatch, okay, whenever you want to rewatch. So you can rewatch that particular section. So I have made these the sections in the video. Now other than that guys, let me clear one more thing, that this technical analysis is not a financial advice of any kind in any form or manner. This technical analysis is not an advice to place your trades in the stock market. This technical analysis is purely, mostly, or heavily based on the technical. Because I am a technical person, I do my technical analysis. Because I do not assume anything and I do not follow the news, and I am not a manipulator. Whether you are making 1000% profits within a day or you are seeing 20% losses within a day, these profits and losses are all yours. I am not responsible for any of these the profits or losses, because I do not know that how you are going to interpret my technical analysis. So guys, I try to give you this S&P 500 technical analysis as accurate as possible. So if you see that the previous week technical analysis, it was more than 90 to 95% accurate. So now guys, let's begin with the technical analysis of the S&P 500 on the weekly chart. So now guys, this is the first point of the agenda, that is the S&P 500 technical analysis on the weekly chart. So here I will do everything for the S&P 500, even if I'm talking about the Dow Jones, the Nasdaq, okay. So I am just taking a reference from the Dow Jones or the Nasdaq so that we can do the technical analysis, or we can get the most accurate results for the S&P 500. So everything will be for or in reference to the S&P 500 only. So this is the S&P 500. So this is the S&P 500 weekly technical analysis. Now guys, again, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon so that you can get my weekly technical analysis on time, and also other informative videos on the S&P 500 index, the Feds, okay, the dollar index, okay, and miss each and everything. And other than that, if you want to make money, if you want to play safe, if you want to know what is going to happen, what is coming, if you want to see the near future of the stock market of the S&P 500 index, then you can join my YouTube community channel. And through this the YouTube community channel, okay, I give you the daily updates, the daily analysis from Monday to Friday. So guys, if you want to join my YouTube community, so I have given the link in the description of the video and also in the comment section. Now guys, let's do the S&P 500 technical analysis on the weekly chart. So this is the weekly chart. And weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. So first comes the candle itself. So if you look into the candle, this is a heavy bearish candle. So what it says? It says that number one, there are very heavy bearish sentiments in the stock market, in the S&P 500, in the Dow Jones, in the in the Nasdaq. Okay. Number two, that this candle, it was able to hold above the 200 week EMA, 200 week EMA. And where is this, the 200 week EMA? This is at 3685. So many of you might not be aware of this, the 200 week EMA, but my community members, they knew this, the 3685, the 200 week EMA 2 days in advance, 2 days in advance. And I told them on this the 21st itself, on this the 21st of September, that was Wednesday, when it came down heavily, I told them that now it is heading to the 200 week EMA, and most likely, or very likely, it will hit the 200 week EMA at 3685. And other than that, there are good chances that it will be able to breach the 200 week EMA, because last time in the week of June, in the week of 13th of June 2022, it was able to hold above the 200 week EMA. Then it moved up, but this is the second time. This is the second time. In this second time, it will not be able to, means the 200 week EMA will not be able to hold. Rather, we will see a breach, and also we can see, okay, a closing below the 200 week EMA, provided that this the Fed update, okay, through this the Fed board meeting. So if there comes, some good news, then if there comes a bad news, okay, in that case the closing will be below the 200 week EMA. So they were able to save the S&P 500, and the closing was at 3693. The 200 week moving average was 3685. So they have closed the S&P 500 just above the 3685. Anyways, if you think that the S&P 500 or the market movers were able to save the S&P 500, no, that's not true. That's not true. Okay, so you might want to ask, if this is not true, then what is true? This is true. Okay, and how? You need to look into the Dow Jones. See, the Dow Jones is the face of the economy. And through this the community notes to my members, and I've told them that because see, the Dow is the biggest index, or the true face of the economy, has breached its low of the June, and also the 200 week moving average. So this psychologically is going to create an impact on all means the S&P 500, the Nasdaq, and the overall stock market. Now, no matter what, the market is heavily bearish and is expected to remain bearish. So even though you might be seeing that the S&P 500 was able to close above the 200 week moving average, and we are going to see a heavy reversal, This is not entirely true. This is not entirely true. Because if you see that the 200 week moving average in case of the Dow Jones was easily able to breach, and this was a heavy breach. So Dow Jones was easily able to breach its 200 week moving average. Secondly, the Dow Jones was also able to breach its previous low that was there in the week of 13th of June. Okay, this means that the psychologically now everything is bearish, not just bearish but heavily bearish. This means that even though the S&P 500 or the traders, okay, who are trading in the S&P 500, they might be thinking that it is going to move up and up and up. No, that is not true. They need to look into the Dow Jones, because now the Dow Jones is the true face of the economy, and whatever is going to happen in the economy, so Dow will react to that, right? This means, so whenever the Dow is bearish or heavily bearish, then all other indices, whether it's the S&P 500 or the Nasdaq, they will follow the Dow Jones. Sooner or later, they will follow. This also means that yesterday, if you see that the low of the S&P 500 that was in the month of June, it was 3637. This was 3637. And if you look into, okay, this is the yesterday candle, this was 3647. This means that because the Dow has breached its previous low comfortably, the Dow has breached its previous low. This means that soon, very soon, the S&P 500 is also going to breach its previous low of 3637. Then it will come down to 3500, and then thereafter, some other levels. Anyways, guys, so we are doing the S&P 500 technical analysis on the weekly chart. So this was the candle. So the candle itself, it's a heavy bearish candle for the SP 500. Now, so the candle is good, means there are very heavy sentiments. Okay, this is the candle. Okay. Now comes the technical indicator. So technical indicators, again, this is the lower band of the Bollinger Band. This is the median of the Bollinger Band, because the S&P 500 on the weekly chart has closed between the lower band of the Bollinger Band and the median. This means that the S&P 500 is bearish through the Bollinger Band. Then comes the moving averages. If you look into the moving averages, clear fan out. Last week I told you that there is a slip, and the slips are extremely dangerous. Dangerous means that the slips will give a very heavy momentum to that particular trend. In this case, the trend was the bear trend. So that heavy momentum, it came in favor of the bears. This means that I won't be surprised, or you won't be surprised, or we can expect another heavy bear candle in the coming week. Okay, so that will be good. Anyways, so these are moving averages, clear fan out. Secondly, the closing is below these the moving averages. Through moving averages, the SP500 is clearly bearish, heavily bearish. Okay, absolute bearish. Other than that, the Ichimoku, the S&P 500 is trading below the Ichimoku. This means that the S&P 500 is bearish through the Ichimoku. Now comes some other technical indicators. So we have the first technical indicator, and this is the MACD. Last week I told you that we are going to see a crossover in the MACD, and then the MACD will be bearish, because we were confident that the S&P 500 will give a gap down open and there will be a heavy red candle. Okay, and that was the reason I told you that we are going to see a crossover in the MACD, and that the MACD will be bearish. Now the MACD is bearish because the MACD is less than the signal. Secondly, both MACD and the signal are negative. Both MACD and the signal are negative, right? Then comes the stochastic RSI. Stochastic RSI, K channel is less than the D channel. There was a slip. Okay, so the stochastic RSI for the S&P 500 is again bearish. Because the MACD and the stochastic RSI both are now bearish, this means be ready to see a very heavy fall in the coming days or in weeks. So if you have, see guys, again, if you have subscribed to my channel, then you know that I have mentioned this thing many a times, that whenever the stochastic RSI and the MACD, they are following a particular direction, okay, they are following or they are in the same direction, then most likely that is the direction of the stock market, that is the direction of the S&P 500 index, that is the direction of the Dow Jones or the Nasdaq. So now we are clear that more bearish is going to come. So this is what you are seeing, that it is holding above 200 day, that 200 week moving average. No, this is not true. This is not true. And I think that the market manipulators, once again, they are going to create some kind of trap. So this is what we will discuss, okay, in when I will do the technical analysis. This the S&P 500 technical analysis on the daily chart, and also in the section of the probable movement of the S&P 500. Now, so these are bearish. Then comes the divergence. So divergence, as of now, divergence in the closing prices of the candles of the S&P 500 is normal. Then comes the the volatility. Yes, indeed. Okay, it is heavy. Okay, or last time it was 198. That was the all-time high, and now it is 193. So still the S&P 500 index, or the S&P 500, it is heavily volatile. Heavily volatile. Okay. So guys, through all of the technical indicators, we have seen that the S&P 500 index on the weekly chart, the SP500 is heavily bearish, or it is absolute bearish, right? See guys, whenever you are trading, okay, see whether it is SP500, whether it is Dow Jones, whether it is the Nasdaq, okay, you always you need to see, okay, what is happening on the weekly chart, because the weekly chart will give you a very clear picture, okay, for the coming days or the weeks, that what you can anticipate, okay. And that is the reason, because we were looking into the weekly chart, okay, engulfing of not just one candle but two candles. Okay, so that has created a situation, a gap down open, then a heavy fall. Okay, so this is why, okay, I always recommend to look into the weekly chart. And here we are talking about the weekly chart of the S&P 500. So on the weekly chart of the S&P 500, we have seen that the S&P 500, it is absolute bearish, Now guys, next comes the second point of the agenda, and that is the recession and the Federal Reserve board meeting. That was yesterday. So now we are going to discuss the recession in the overall stock market, in the economy, okay, through the S&P 500, Dow Jones, Nasdaq. Okay, so we will discuss the recession, and then the outcome of the Federal Reserve board meeting, or what was discussed in the Federal Reserve board meeting. And guys, this section is very important, because the upcoming trend, it will be derived, or it will be because of these factors. So now guys, let's discuss the second point of our agenda, and that is the recession and the Feds. So recession, okay, this is what I'm telling you from the month of January, that we are in the recession, and through the technicals, I have told you this thing, that we are going to enter into the recession. And in the month of April, okay, I have confirmed that now we are in the official recession. But the Feds, okay, they have still not accepted this the fact. Anyways, okay, we are not concerned about this. Okay, these are Feds. So what has happened is that the Bank of England, okay guys, yes, once again, if you have not subscribed to my channel, then please subscribe to my channel, okay, and click on the bell notification icon. And other than that, if you want to join my YouTube community to get the daily analysis of the S&P 500 in order to play safe and in order to make money, then I have given the link in the description of the video and also in the comment section. So yes, the Bank of England. So yesterday, day before yesterday, okay, the Bank of England, okay, has raised the rates, okay, again, and the Bank of England has accepted and confirmed that they are in the recession. Means the UK economy, okay, is in the official recession. Other than that, the UK, okay, all other these the European countries are in the official recession. Other than that, the Swiss bank, okay, the Swiss bank has once again raised the interest rate. So Swiss bank is always reluctant to raise the interest rates. Okay, so until and unless the situation is very critical, the Swiss bank, okay, will never raise the interest rates. So Swiss bank, okay, is doing this the hike in the interest rates after, I guess, 25 or 30 years. Okay, so first the Feds and other European countries have raised the interest rates, and then only the Swiss bank, okay, came into the picture and raised the interest rate. So this is with the Bank of England. But I don't know, like, why the Feds are not accepting the fact that we are in the recession. Rather, they are simply making the situation much worse, because they are not acknowledging that we are in the recession. Why much worse? Because until and unless Fed says that there is a recession, there are many people, millions of people, okay. See, the businesses, they do not trust the Feds. They know that we are in the recession, okay. They know each and everything in advance, right? So they do not trust the Feds, okay, but millions of people, okay, they trust the Feds and they trust the government. So until and unless the Fed says that we are in the official recession, they are not going to see, or they are not going to they are not going to prepare for the recession. So once the Fed says the recession, then what will happen? Then these the millions of people, okay, they will reduce their spending. They will not go for the unnecessary items. They will not go for these the loans, because as of now, because of this the inflation, the loans are extremely costlier, because the Feds are raising the interest rates back to back. This time it was 75 bps. Once again, back to back 75 bps. This is something we have not seen okay, until like 1977 70 years. So this thing what is happening after 40-45 years. Okay, so the kind of situation that we have seen, okay, back then 40 or 45 years ago, that, okay, almost that kind of situation or much worse than that, okay, is going to come. Okay, but still the Feds are reluctant. Feds are not acknowledging, okay, not acknowledging that we are in the recession. Okay, anyways, they have their own, okay, this the thinking. So until and unless Feds do not, okay, realize that there is a recession, so they have realized, but until and unless the Feds do not officially announce that there is a recession, so the people, okay, they will keep on spending on unnecessary items. Okay, they will go to the bank, they will take the loans. Means, so this is what actually the Feds want. They want the people to spend money, even if it comes in the form of loans. They want it to be there. Okay, but they do not know that what will happen when the recession, actual recession impacts will be seen, when the people won't be able to repay the loans. In that case, what will happen? It will be the people. It will be the people who will suffer. It will not be the Feds, okay, or the banks who will suffer. It will be the people who are going to suffer. Okay, so anyways, Feds, they have their own reasons. So the recession is there. Technically, recession is there in almost each and every weekly technical analysis. Okay, I mentioned technically that there is a recession. Okay, and now the Bank of England, okay, the UK government has confirmed and accepted the fact that they are in the recession. European economy, European Union is in the recession. Okay, other than that, all other like the Asian markets, okay, they are already entering or have entered into the recession. Okay, anyways, the heavy impact is on the Europe itself. And guys, again, if you're subscribed and if you have watched my previous technical analysis of S&P 500, then I mentioned this thing, that if you are thinking that the Ukraine is winning the war, there was news that the Russia is withdrawing okay, its troops. So there was this the section, impact of withdrawal of Russian troops on S&P 500 and on the overall stock market. So I mentioned that no, whatever you are seeing through the news, okay, that is again not true, because these the people from the news, okay, then the market manipulators, okay, they have their own means, they have their own needs, and they want you to believe that now the things are going to improve, so that, okay, they can trap you again. Anyways, so in this the previous weekly technical analysis, I've told you that no, there will be a second wave. Okay, very soon there will be a second wave. There was the first wave, then the Putin, he has withdrawn, okay, he has withdrawn the troops. Okay, now there will be a second wave, and this second wave will be much more intense than the first wave. Okay, and because this the second wave will be much more intense, this means that it will create a very heavy impact on overall, okay, overall on the stock market, not just the US stock market, but the global stock market, and eventually on our S&P 500. Right, so we are, see, whatever we are discussing here, whatever we are talking about like recession, Fed, it is all for the S&P 500 and nothing else. Okay, and yes, you can also include the Dow Jones and the Nasdaq. So I told you, okay, in this the previous weekly technical analysis about, okay, this the Russia, okay, the Putin thing. Okay, and now you can see that exactly the same thing has happened. Now the second wave is in the picture. Okay, and this the second wave will be much more intense, because the Putin has threatened, and the Putin has threatened that he is going to use, okay, this thing. I'm not going to spell it out, okay, but now you know that what does this the N means. Okay, so Putin has threatened the Western countries that he is serious about this thing. Okay, and this is not a joke, and that is why I last week I told you that Putin has never accepted a defeat in his life. Then how can you think that he is withdrawing that he's withdrawing the troops, that he has accepted the defeat? No. So I've told you that no. This is not what is true. This is not what the this is not what the true picture is. But the true picture is that he is withdrawing so that he can regroup, he can replan, and he can come okay with this the second wave, and the second wave will be much more intense. Now, other than that, see, as such, we are not concerned about the Russia, okay, and the Ukraine. But why we are concerned about the Russia and the Ukraine? Again, this is because of the food, because food is what is creating the absolute the mayhem in the stock market. The food, yes, you have heard it right, the food. And I've discussed the impact of food on the stock market in I guess in last to last technical analysis. So that was for the week of 6th of September, okay, or for the 12th or 13th of, okay, you can check, okay. So I've discussed this, the impact of food on this the stock market, okay. So what is see, the thing is that the Russia and the Ukraine are the major exporters of the wheat. They are the major exporters of the wheat, okay. But now because the Russia and Ukraine, okay, they are okay on this the war, so there is a shortage of the wheat. Other than that, okay, the other countries, okay, like India, okay, and some other countries who are the major exporters of the wheat, they have banned, they have sorry, they have banned the exports, they have banned the exports of the wheat, okay. So this is now again Russia and the Ukraine, okay, and then the Asian countries like India and other countries who are the major exporters of the wheat, they have banned the export because they themselves, okay, are facing some crisis. So overall the thing is that, see, we can live without, okay, a car, we can live without these the expensive items, okay, not a big deal. But we cannot live without food. Food is the essential item, okay. Food and the water is what that keeps us alive, okay. So you cannot live without the food, okay. And wheat is what the billions of people, okay, 99.99% of the people, okay, they are dependent on the wheat, okay. So wheat is actually creating a very very heavy problem, okay. And now comes the second wave. Second wave will simply means everything from the Russia and Ukraine, okay, it will be blocked, okay, the wheat and all. So wheat means the food prices will increase overall globally. The food prices will increase because everyone want to eat the food, okay. Food means the wheat, okay. And countries, okay, they are the rich countries, okay, they are willing to pay any price in order to in order to buy this the wheat, okay, from the other countries, okay. Because these the rich countries, okay, they are increasing the prices because they are willing to pay heavy prices, okay. They want to procure the wheat, okay. This is increasing the price of the wheat. Because this is increasing the price of the wheat, there is a rubbing effect on rice, okay, rice and other essential commodities, okay. And that is the reason. And again, the rubbing effect of wheat and rice is on each and everything, the vegetables. And other than that, guys, we have this the climate, okay, this is the global warming. So this is the global warming, okay, it is again creating a very very heavy problem for all of us. Because of this the global warming, there is already a shortage of the food, already a shortage of the food, okay, vegetable, wheat, and each and everything. That is why the countries like India, okay, they were the major exporters of the wheat along with the Ukraine and the Russia. But now they themselves, okay, are banning because they are seeing, okay, there's the global warming, okay, and that means they themselves are facing some crisis. These the wheat crisis, okay, the food crisis. So this is the global warming, okay. Then in most of the countries, okay, there are droughts, okay. In some countries there are heavy floods. Means uh, this means there means the conditions are not good, okay, where we can say, okay, yes, that you can produce, okay, the vegetables, the fruits, okay, or the wheat or the rice. So conditions, as of now, the conditions are not good, okay, for this the produce. Anyways, so this was again, okay, this the wheat thing, okay. And so now the impact of this thing is that because the food prices are going up, food prices are moving up, okay, and food is the essential item. This is increasing the inflation. So this is what you are seeing, 8.3%. Okay, this is the 8.3% inflation. Okay, and what is the standard rate of the inflation? That the Fed says 2%. Okay, so as of now, the inflation is more than 4 times, more than 4 times. Okay, now technically, okay, if we talk about the technicals, then the inflation is holding at its support level of 8.3. This means that if in the month of October, if there comes the inflation anything above 8.3, there will be a mayhem in the overall stock market, in the global stock market, in the S&P 500, in the Dow Jones, everywhere. Because once it comes above 8.3, this means now it will move up in two figures, 10, 11, 12, and so. Okay, something that we have not seen in years. And major contributor to this, the inflation, is the food. Okay, and as of now, you can comfortably accept that yes, the inflation is going to move up because now the winters are coming. Okay, winters are coming, and there is already a shortage of this the food. Okay, and because the winters, okay, people will be needing more food, okay, as compared to this the summers. Okay, this means that food prices are further going to increase. Okay, that will simply result in further increase in the inflation. Okay, so we are already in the recession. Okay, you need not to wait for an official announcement, because by the time there will be an official announcement, okay, you will see that everything has matched up. Now guys, let's discuss this the Fed's board meeting. Okay, so yesterday the Feds, okay, they have had this the board meeting, and there was the issues. Okay, and now we can see that what is going to come, okay, in the coming weeks, and what the Feds are going to think, okay, the next rate hike and each and everything. Okay, so again, the impact on the S&P 500, the Dow Jones and the Nasdaq, and overall stock market and the global stock market. So I've given this the final update, okay, as I always do. Okay, so I always give, okay, these the regular updates, okay, these are text updates and the video updates to my YouTube community members, okay, and these are the part of the daily analysis of the S&P 500. So yesterday's in this the final update. Okay, so guys, before I talk about this the Federal Reserve Board talk, okay, let's see what the Feds have said on Wednesday, on 21st of September, and how that is going to impact the overall stock market and the S&P 500. So this was the daily analysis on September 22nd. Then this was the Fed's update on September 21st. Yes. So yes, so the Fed chairman, okay, on Wednesday, on September 21st, has said that the Feds are committed to bring down the inflation back to 2%. Okay, so this is the usual sentence. Okay, so he always says the same thing again and again. Okay, nothing new. Now, what was new? What was new in his this the press conference? Okay, number one, inflation. Inflation means, so first time he has admitted that he doesn't know whether the inflation will come down or not, because see, in the month of July, the Fed chairman has said that the inflation, most likely the inflation will come down in the month of July. Okay, now this time in the month of September, now he has admitted that he doesn't know. So one, this the press reporter, he has asked, okay, about this inflation, whether means if he has if the Fed chairman has any clarity about the inflation, whether it will come down or move up, then he said that he doesn't know. He doesn't know that whether the inflation will come down or not, because the things have changed, okay, within a month or within 2 months. But no, that's not true. That's not true. The inflation was already there, okay, for like 4 or 5 months, and the Fed chairman knew already. He knew this thing very well in advance, that inflation is not going to come down, rather it is going to move up. Okay, but he willingly said in the month of July that the inflation can come down, or the inflation may come down. Okay, and other than that, he see that because the inflation will come down, then the market can expect, okay, some relief, and there will be, there's the pause in the pause in the interest rates, okay, and maybe, some rate cuts, and that has actually helped the market manipulators to manipulate the market, that in the month of July, okay, on 27th of July, they have pushed the stock market, pushed the S&P 500 heavily up. That was a manipulated movement, okay, because of the comments of the Fed chairman. Okay, anyways, finally, okay, the point of relief is that the Fed chairman has admitted and accepted that he doesn't know. Okay, this is the good thing. Second, the recession. So indirectly he said that yes, everything will slow down, and this is the same thing that he has mentioned in his the conference that was there in the month of August, I guess. Okay, that everything will slow down, and the people and the businesses will have to take some pain. Okay, So he says that everything will slow down and the economy will slow down and must slow down, okay, in order to fix the things. Okay, the things means whatever this was the mess, okay, the inflation and everything. Then when he was asked that whether he is going to accept that there is a recession or not, then he said that he cannot call it a, that he cannot comment, okay, whether this is to be called as a recession or not. Okay, but if the media, okay, if these the press reporters, okay, if they want to, then they can use the word recession. Okay, means again I don't know that why he is not accepting this thing, why he is again creating a situation where the people, okay, the people, they are going to suffer because millions of people, okay, they trust him, they trust the government, and they are waiting for the government to announce. Okay, until and unless the government announce, okay, they are going to spend the money on unnecessary items, they are going to take the loans that they won't be able to repay. Okay, anyways, what can we do? It is the job of the feds and the government, okay, and we are not the feds and we are not the government. So I'm just doing a technical analysis, you are just watching this a technical analysis, and you are trading. Okay, so that's all we can do. Okay, nothing else. Anyways, so recession, okay, anyways, then comes the rate hike. Yes, he has admitted that the further rate hikes of the same size means 75 bps, okay, are still possible. And if the inflation doesn't come down, we know that it won't be coming down much, or we can see that it will be moving up. So if it doesn't come down or if it moves up, then the next rate hike in the month of September will be again 75 bps, back to back 75 bps, 75 bps, 75 bps, okay, or maybe like 100 bps. So he has admitted that further rate hikes, okay, or like 75 bps, okay, or even more than that are still possible because the inflation is not coming down, okay, and feds have to do everything, okay, that they can do in order to bring down the inflation. Okay, so even if they have to increase the rates back to back, they will do that. Okay, then comes the terminal rate. This was the most important part, okay, and that has simply brought down overall this okay, the S&P 500, the okay, this the stock market, the Dow Jones and Nasdaq, and the SP 500. Okay, so he said that in the month of July, he said that Feds are looking for a maximum of 3.75%. Okay, maximum of 3.75% rate. Now, just after 1 month, he is saying that they are looking for 4.6%, a heavy jump from 3.75 to 4.6. Okay, this has created a fear in the market. Once again, the market manipulators, they have taken the advantage of this situation. Okay, situation means this the particular situation. So what has happened is that it came down and then immediately it moved up and it hit the 3907. 3907, and this is the same thing that I told my community members that see, whenever you see it is hitting 3884 or 3907, then go short. Okay, means go bearish, short sell, and that is the reason my members, they have made heavy money, a lot of money. Okay, anyways, so the rate hikes, okay, so this is the terminal rate. So terminal rate, what was actually the trigger? Okay, so what is the summary of this thing? That the feds don't know what is going to come and what kind of situation they, us, and everyone is going to face on the economic front. Because feds are fearful, feds are unsure, feds are confused, thus overall the stock market is much more fearful. Okay, and then again it will be coming back to the desired levels of 3500. So see, this was the information that I gave to my members, okay, on September 21st, before the closing of the market, because before the closing of the S&P 500. And I told them that tomorrow we are going to see either a gap down open, or irrespective of open, okay, again we can see this the downward. So see, I help my community members on the daily basis, and I tell them, okay, what they are expecting or what they can expect the next day. Okay, gap up or the gap down. Okay, not always, okay, but most of the time gap up or the gap down or the movement, okay, and what is going to happen, and each and everything. And that is the reason they are playing safe, okay, and they are avoid falling into the traps, and they are making money. So again, guys, if you want to join my YouTube community, okay, to play safe, to avoid falling into the traps and to make money, then I've given the link in the description and also in the comment section. So this was the press conference on 21st of September. Now let's see, okay, what the Feds have said yesterday on this the Friday. So yesterday on Friday, okay, September 23rd, the the Federal Reserve Board talk. So the first thing was clear that there are labor problems. There are labor problems. Okay, see, the Feds have again and again said that the labor market is very strong. Okay, but in actual, what is happening is that the labor market is strong because there is a need. There is a need. Okay, businesses, they need the labor. Okay, means businesses, they need the people. They want to hire the people, but there are labor problems. Okay, people, one day they go to the job, okay, and then the other day they do not go to the job. One week they go, okay, they go to this the job, then the next week, okay, they go to some other job where they are getting, more money. So there are labor problems. Okay, there are very heavy disruptions, and this is creating a very heavy problem for the businesses. Okay, and when the businesses are in the problem, then the problem is seen on the economic front. So the Fed chairman, okay, this thing, and then comes the data driven approach. So Fed chairman again and again says that we will be, data driven, we will be looking into the data, but this data is not going to tell you that this is the real picture. Okay, so now the Feds must be realistic, and they must accept that yes, the data driven is one thing, but the labor market, okay, it is not doing well. It is not doing well. There is a shortage of labor. Secondly, okay, the people, okay, they are behaving differently. Okay, and that the cost, it has skyrocketed like 40 to 50%. Okay, then comes the food. Now again, we have discussed the food and how it is going to impact the stock market and the S&P 500. Then logistics, yes, logistics, okay, it is again a problem, and it is not going to get resolved soon. It will take 2 to 3 years, okay, like 2025 or so. Okay, then comes the inflation. Again, the inflation, okay, remains, okay, 8.3. So we have discussed the inflation and the impact of the inflation on the S&P 500, the overall stock market, the Dow Jones, the Nasdaq. So overall, we can see, okay, that we are heading into the great recession. Not in the recession, but in the great recession, or maybe in one exceptional case, a great recession. Okay, that will be there until 2025. Okay, at least means by the end of 2024 or by the end of 2025, 2 to 3 years or 2 to 4 years. So guys, this was the thing with the recession and the facts. Now guys, comes the next part of the agenda, and this part is the support and resistance levels for the S&P 500 for the coming week. That is for the week of September 26th, 2022. Okay guys, now let's talk about the support and resistance levels. So in the previous section, okay, we have talked about this, the recession, okay, and that the Feds, and that we are going to enter into the great recession or into the great recession, and how it is going to impact us all. Okay, and why we are and why we are going to enter into the great recession. Okay, so we have discussed these things in very detail, and all other impacts and all other factors. Okay, now this part is the support and resistance levels. So the support and resistance levels. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And also, if you want to join my YouTube community, then I've given the link in the description of the video and also in the comment section. So as of now, okay, everything has changed. This is the whole scenario. Okay, it has changed. So what we can see is that any retrace will be or should be limited to 3840. This is what? This is 3840. Okay, any retrace will be or should be limited to 3840. Okay, and in one exceptional case, okay, it should be limited to 3884. See guys, whatever I am telling you here, okay, this is for the S&P 500. So these, the support and resistance levels, are for the S&P 500, not for the Dow Jones, not for the Nasdaq, right? So and guys, once again, why I am saying 3840, okay, or a maximum of, in one exception case, like 3884, okay, in the coming week. And guys, once again, this is for the coming week. I'm not saying that these levels are there for the 1 month or so. No, this is the S&P 500 weekly technical analysis. So whatever I'm telling you here, okay, is for the coming week, only for the next 5 or 7 days. That's it. Okay, then I will give you the next weekly technical analysis, and then I will give you the new numbers. Okay, anyways, so these are the support and resistance levels for the S&P 500. So now, why I am saying that if there comes, okay, a retrace, then it will be limited to this particular level. The reason is that we have seen that on 4 days, 1, 2, 3, and this was also the fourth day, okay, when the S&P 500 or this the SP500 was holding above the 3840. Okay, this means that 3840, and also historically this has acted as a good confluence zone. Again guys, the support and resistance levels are not the absolute levels but are the zones. So when I say 3840, I means anything from 3830 to 3850. So this is the zone of the 3840. So if you see that if the S&P 500 is seeing a retrace, it is coming up, and if it is struggling in this the zone, okay, just like it was struggling back in the zone of 4110, that is where I told my members on this particular day, go bearish, okay, feel free to short, feel free to buy put options, and they have made a lot of money. When everyone lost money, my members, they have made a lot of money, okay, because see, this is what means when you know the technicals, when you know the levels, okay, and then you can play safe. Anyways, so this will be the range, this will be the zone, this will be the zone of the 3840, okay, plus minus 10. So and other than that, okay, if we look into the Dow Jones, so when we look into this the Dow Jones, okay, so what we see that on the weekly chart, of the Dow Jones, when the Dow Jones retraces, then it will be retracing to what level? To the 200 week moving average. As simple as that. Okay, it will be retracing back to the 200 week moving average, just to honor the 200 week moving average. So yes, so some of my members, okay, they have asked me the question that how much that what is the probability, okay, that we will see a retrace. So I told them that yes, there is a good probability that we can see a retrace, and there are multiple reasons, okay, and one of the reason is that this the okay 3840 and all. Other than that, okay, the good reason is this the 200 week moving average of the Dow Jones, okay. And guys, once again, you need to learn and you need to understand that the Dow Jones and the S&P 500 or the SP500 and the Nasdaq, okay, so the movement, okay, it remains almost the same, okay, so the movement, it differs by the percentage, because the top contributors, the top components, okay, they are same. For example, Apple is like how much? Apple is like 13%, sorry, no, Apple is like 13% in Nasdaq. Apple is 7% or 8% in the S&P 500. Apple is 3% in the Dow Jones. So these the big companies, okay, they are the major components, okay, of these indices. This means that, for example, if the Dow is moving up by 2%, then the S&P 500 will be there by 1.5% or 2.5%, and the Nasdaq will be there by, you know, like again 1%, 1.5% or 2.5% or 3%. Okay. So the direction, the movement, okay, it will differ only by some percentage, otherwise it will remain same. So when I say that the Dow will see a retrace back to the 200 week moving average, this means that the same impact will be felt on the S&P 500. And also I mentioned that because the Dow has breached the previous low of this of the month of June, this means the same impact will be there, or that the same impact will be seen, okay, in the S&P 500, that the S&P 500 will also be able to breach the previous low. Anyway, so the Dow Jones, okay, it can see a retrace to hit this the 200 week moving average, and also it can even breach the 200 moving average. Okay, that's not a big deal, because what we are concerned about is the closing. This is what I always say, always focus on the closing, not just one closing but the second closing, means two consecutive closing. That's it, okay, and you will find your answer. Okay, so this is the reason for this so any retrace will be limited to 3840. Okay, but before this the 3840 this the retrace will be limited to 3790. So the 3790 itself is going to act as a very good resistance. Okay, other than that, the immediate resistance that comes into the picture is 3735. So this 3735 is going to act as an immediate resistance for the S&P 500. Now comes the support. Okay, so these were the resistances. Now comes the support. So the immediate support for the SP500 comes at 3675. So yesterday, okay, it was there in the picture. Okay, my community members knew, okay, this thing about. They knew about these levels, okay, very well in advance, 2 to 3 days in advance. Anyways, so it came down, then there was a bounce. 3675 is going to act as the support. Then the next support comes at 3635. it is at 3635. Again, because 3635, okay, it is a good support, so we need to look into the zone of 3635, and the zone will be from 3625 to 3645. 3645. Okay, and if you see that yesterday, okay, it hit almost the 3645. It was 3647, okay, actually, but it actually hit the upper band of the zone, and then there was a retreat. Okay, so the zone of 3635 is from 3625 to 3645. Okay, so now we need to see that when it comes down, whether it will be able to hold, okay, here in the zone of 3635, and if yes, then definitely we are going to see the retrace. And if you are my community member, my YouTube community member, then you need not to worry about this thing. I will tell you that when and where and how much percentage wise, okay, we are expecting this the retrace, so that you can take the positions in the stock market, okay, accordingly. Anyways, so this is going to act as a good support. Now guys, we also need to cover some other supports. Okay, and the other supports include, the next support comes at 3600 itself. Then the next support at 3563 or 3565. Then the next support at 3525, and finally the 3500 itself. 3500. And if you see, I have already given you this hint, okay, in the picture in the last week, the last weekly technical analysis, that be ready to grab 3500, because I knew that it is going to hit the 3500 either in this week, means the last week, okay, or the coming week. Okay, so however it came down to 3600 levels only. Okay, anyways, again be ready to grab the 3500. Okay, sorry, not the 3500. Okay, let me tell you, okay, more about this. So now comes the next part. So this 3500, it will be a very very good support. Okay, then comes the next support at 3445, and then comes the 3400 itself. 3400. Now this 3400 is what, okay, we can expect a very very good support and the heavy support, because back in 2019 December 2000 November or December 2019, this was the all-time high for the S&P 500. So when the S&P 500 it was moving up, okay, it formed an all-time high at around 3400 back in November or December, okay, maybe in February 2020, okay, or in November December 2019. So this was the all-time high level for the SP 500. Okay, this means that whenever the S&P 500 it comes down and it hits the 3400, in that case, okay, we can see a hold and a reversal. Okay, means I'm not saying that the S&P 500 will not be able to breach. Yes, it will be able to breach, not a big deal. It can either come down to 3300 levels. Okay, not a big deal, but eventually, okay, it will be able to retrace and it will be able to close above 3400 or around 3400. Okay, so this is how it works. But again, if you are my community member, if you are my YouTube community member, then you need to then you need not to worry about, okay, this thing, okay, levels and all, because I'll be giving you the daily analysis, the daily update. Okay, and accordingly you can play safe and you can make money. Now guys, if you're subscribed to my channel, okay, for last many months, then you might have watched this video, okay, that I posted in the month of June. Okay, the S&P 500 crashed 2022 and 2023. In this video itself, okay, I have mentioned that this is what is going to happen: 3400, 3000, 2900 and 2600, even, okay, even 2600. So this was back in June 2022. Okay, anyways guys, these are the support and resistance levels for the S&P 500. Okay, and now we are going to discuss the next point or the next part of the agenda, and that is the dollar index. Okay, dollar index, the bond yield, impact of the dollar index, bond yield, okay, on the inflation, recession, okay, etc. So guys, now the next part of the agenda is the dollar index, bond yield, recession, okay, and these things. So in the previous part, okay, we have seen the support and resistance levels for the S&P 500, and now we will see that how the dollar index and the bond yield are going to create a problem for the S&P 500, and what we can expect, okay, in the S&P 500, that how the SP 500 is going to move. So guys, this is the dollar index. This is the dollar index. Now, what is the dollar index? So I have discussed this thing again and again in last 2 or 3 weekly technical analysis. Dollar index means basically the strength of the dollar corresponding to the euro, the pound, the Japanese yen, the Swiss franc, and a few other currencies. Because the European market, European economy, okay, it is coming down, and that is helping the dollar to move up, dollar to get some strength. The strength in the dollar is not the result of the Fed, not the result of the Federal Reserve, okay, the policies of the Federal Reserve or the policies of the US government. No, the result in this the dollar index is basically or only and only because the European economy is shrinking. Okay, Europe is seeing the hard times. That is the reason. Okay, so technically, only and only technically, okay, see the the European Union, okay, or the European countries, the economy of the European countries is much worse than the economy of the US. Okay, economy of the US is not good, but the economy of the European countries, okay, these are much worse than, okay, as compared to the US economy. And because these the European countries, they are doing, okay, not well, okay, they are seeing some bad situation. That is the reason, okay, their currencies are coming down to the level that we have not seen 20, 30, 40 years. So yesterday the pound sterling, okay, it came down like 30 or 40 years. Okay, so 30, 40 years ago the pound sterling, okay, was the levels, okay, as compared to the dollar. Okay, 30, 40 years. So this is what we are seeing, okay, in this the UK. Okay, this the pound, because the Bank of England has accepted, the government of the UK has accepted that there is a recession, they are in the recession. Okay, so that has created this the impact. Now again, guys, don't think, okay, that this the dollar index, okay, it will strengthen and so, because soon, very soon, the Feds and the US government is also going to announce an official recession. In that case, what will happen, that this the dollar index that is moving up and up, then it can see, okay, a bit downtrend, okay, but it will be able to again, as long as the European market is not doing well, the dollar will be remain, okay, the dollar will remain, or the dollar will be more strong, okay, as compared to these the currencies. So if you are trading in the currencies, okay, then you know what to do and how to make money. Now again, why we discuss the dollar index? Because the dollar is reciprocal to the stock market. If the dollar moves up, the stock market comes down. If the stock market moves up, then the dollar comes down. Simple. Okay, that's a theory. But again, guys, again and again, okay, I mentioned that it is not only the dollar that is driving the stock market down or up. Okay, there are other contributors, and the major contributor is the inflation. And then, and the major contributor, okay, to this the inflation is the food, okay, that we have discussed in the last to last section of this video, okay, about the inflation, recession, and the Fed. So we have discussed in very detail, okay, this thing. So this is with this. This is with this the dollar index. Now, what I want to show you is that if you look into the technicals of the dollar index, then dollar index is absolute bullish, and the dollar index has not touched the levels where we can say, okay, that now it is coming down. No, this means that the dollar index still has some good potential to further move up, to make or to build new all-time highs. This is again, okay, this is the all-time high, but it is going to form a new all-time high. Okay, so until and unless the technicals of the dollar index says that, okay, that the technicals are saturated. For example, if this the K channel, okay, of the stochastic RSI hit 100, okay, and also the D channel, then we can say, okay, now it is going to come down, or now it will be on this the downtrend. When the dollar index, okay, will be in this the downtrend, then the stock market will get some relief, and then the stock market will move up. But until and unless the dollar index is moving up, okay, we cannot say that the stock market is going to get any kind of relief, or the SP 500 or the Dow Jones or the Nasdaq is going to get any kind of relief. Okay, everything is expected to come down. Simple. Okay. So this is with the dollar index. So the dollar index is absolute bullish. The technicals are still not saturated, so need not to worry about it. It is further going to move up. Okay, I'm not saying that it will be moving up heavily. Okay, maybe slowly, but it is going to move because it is bullish. Anyways, so this is with the dollar index. Now let's talk about the 2-year bond yield. Okay, bond yield. If you see that This is a chart of the bond yield. Everything is super bullish, absolute bullish. And the saturation in this the stochastic RSI for 1, 2, 3, 4, 5, 6, 5 candles. Okay, so means overall this the entire week. Okay, the 2-year bond yield, okay, it was moving up and up, okay, for the entire week. That on Monday also, okay, it can further move up, okay, before it can see, okay, this the downtrend. Because see again the bond yield, if you see, okay, these are technicals are saturated, and it cannot remain, okay, this is the up and up, because the technicals are saturated. Either on Monday or on Tuesday, the bond yield, okay, the bond yield, it will come down. And when this the bond yield will come down, then there will be a relief to the stock market again. But that relief may get or may be diminished by the dollar index, because dollar index is bullish. But if on Monday, if the dollar index is okay, it comes down, and if this the bond yield, okay, it also comes down, then it will give a relief to the stock market and to the S&P 500. And on Monday itself we can see a reversal. Okay, but guys, once again let me tell you this: we are in a bear trend. We are in a bear trend. This means that every retrace is an opportunity to go bearish, not bullish, not bullish, not bullish. Every opportunity sorry, every retrace is an opportunity to go bearish. Go bearish where? Okay, or at what level? For that you can use our support and resistance levels. Okay, and if you see that the S&P 500 or the SP500 is struggling on these levels, okay, in that case you can short sell and you will make money. But if you are my community member, then you need not to worry about it. Okay. Anyways, so this is with the 2-year bond yield. Now, as such, this upward movement, this very heavy upward movement, okay, in the dollar index, and this very heavy upward movement in the 2-year bond yield. And again, guys, the 2-year bond yield, it is going to hit the 5%. Okay. So I think there won't be any kind of relief, okay, until and unless it hits the 5%. This means that even if the 2-year bond yield, okay, even if it comes down, okay, a bit, then that's okay. But again, it will move up. It is bullish. It will move up. Okay, so you need not to worry about it. It will move up. Okay. So through this the 2-year bond yield, okay, and through this the dollar index, we are now sure that now further the situation is going to deteriorate, and we are going to enter into the great recession, and the S&P 500 or the SP500, okay, it is going to hit, okay, or to breach 3,400, and it will be heading to 3,000 levels. Okay, it may take some time. It may take some time. Okay, a few weeks. Okay, or it may hit these the levels of 3,000. Okay, by Christmas or so. Okay, but it is in the downtrend. But I won't be surprised. Okay, if it hits the levels of 3,000, 3,100 by next month or by November. Okay. Anyway, so this is going to impact, okay, on this the recession. So this will say, okay, that now we are heading into the recession. Sorry, not the recession, but the great recession. See guys, once again, recession does not mean that you are not going to make money or you cannot make money. Recession means that you can make a lot of money, a lot of money in very short period of time. And how and why? Because if you see that during recession, what happens is that you see a very heavy candle, very heavy candle, 4% down, 2% down, or 2.5% down, okay, 3% down. So you see very heavy candles, and this is where you make very heavy money in very short period of time. And that is the reason, and that is the only reason why my members, my YouTube community members, they are making heavy money, okay, in this the bear trend, in this the okay, the so-called recession. So as of now, let's say, okay, they are making like let's say 1,000%. Okay, but if this would have been, okay, a normal bull trend, in that case they would have been making like 200% or 300%. So this 1,000% is a result of this the bear trend, the extremely heavy bear trend, and the much anticipated the great recession. Okay, so the recession is, again, it is the best time you can make a lot of money, a lot of money. Now guys, now comes the next part of our agenda, and this is the S&P 500 technical analysis on the daily chart. So earlier we did the S&P 500 technical analysis on the weekly chart, okay, to look into this the big picture, that what is happening, and we have seen that there was the absolute bearish trend, okay, for this the SP 500. Now we are going to do this the S&P 500 technical analysis on the daily chart, and we will see that how the SP 500 is going to behave in the coming week. Now guys, before I do this the S&P 500 technical analysis, I have this information to share with you, that if you want to join my YouTube community in order to get the daily updates, okay, just like these the daily updates, the daily analysis of the S&P 500, the videos, the text notes. And if you want to make a lot of money, okay, the profits, the heavy profits, if you want to play safe, if you want to avoid falling into the traps, so in that case, okay, you can join my YouTube community. And let me tell you that how you can join my YouTube community. Okay, so this is my YouTube channel page. So I've given the link in the description of the video and also in the comment section. So when you click on that link, okay, then this my channel page will open in, and on this channel page you will see join. This is the join button, JOIN, join button. And when you click on this the join button, and once you click on this the join button, then you will see that there are these two options, only one midweek update and all midweek updates. So when I say midweek update, I mean the daily analysis. So only one midweek update means you will get the daily analysis only on Monday, because it is only for one day. Okay, then we have all midweek updates. All midweek updates means you will get the daily analysis of the S&P 500 from Monday to Friday. The videos, the text note, each and everything from Monday to Friday. Okay, the daily analysis for, okay, if you opt for this, the all midweek updates. And guys, if you notice, okay, my members, so these are my members. So my members, okay, they have opted for, like 95% of my members, they have opted for all midweek updates. So if you see that my members, they have opted for all midweek updates. This means that they are getting the daily analysis of the S&P 500 from Monday to Friday, daily analysis of the S&P 500. So guys, I have given the link to my channel in the description of the video and also in the comment section. Whenever you want to join, whenever you want to play safe, whenever you want to make money, whenever you want to foresee the future. So again guys, the link is in the description and also in the comment section. Whenever you want to join my YouTube channel, you are welcome. So guys, now let's do the S&P 500 technical analysis on this the daily chart. And once again guys, if you're not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. So the technical analysis, first comes the candle itself. If you look into the candle, although it looks like a hammer, but it is not a hammer. It is not a hammer, right? It is just a bear candle. Okay. So all it says that there are bear sentiments and nothing else. Yes. There is one more thing that it says, because in last 1 hour, okay, last 30 minutes, there was a reversal. This means that on Monday, okay, immediately upon open, okay, we can see some bullish sentiments. Okay, that will be there for like 5 minutes, 15 minutes, okay, or for some time. Okay. And also whether we are going to see a heavy bullish sentiments, okay, means for the rest of the day or not. Okay, so that we will discuss, okay, in the S&P 500, this is the probable movement. Okay, so let me first cover this, the S&P 500 technical analysis on the daily chart. So this is the candle, okay, and nothing else. Now guys, then comes this, the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. The S&P 500 has closed below the lower band and below the median. This means it is absolute bearish. S&P 500 or this the SP 500 is absolute bearish through the Bollinger Bands. Simple. Okay. Then comes the moving averages. Clear fan out, and the closing is below the moving averages. This means that the S&P 500 is heavily bearish, is absolute bearish through the moving averages, right? And guys, this is what I told you last week, because there is a slip. This means that whatever you are going to see, it will be very, very heavy, very heavy. Okay. Anyways, then comes the Ichimoku cloud trading. The S&P 500 or this the SP 500 is trading below the Ichimoku cloud. This means that the SP 500 is bearish through the Ichimoku. Okay. Then comes some other technical indicators, and now let's see how the S&P 500, okay, or through this the technical indicators, okay, what the technical indicators are saying about the S&P 500. First comes the MACD. MACD is absolute bearish, because MACD is less than the signal. MACD and the signal both are negative, bearish. Okay. Then comes the stochastic RSI. The K channel is 0 and the D channel is 7. K channel is 0. I repeat, K channel is 0. Okay, and the magic of this 0. Okay, so I will discuss the magic of this 0 in the probable movement of the S&P 500. Okay, so just remember this part. As of now, it is absolute bearish. Divergence is okay. Now the divergence is creating a situation for a reversal, for a bullish reversal. I'm not saying a short term or a very heavy bullish reversal. No, I am simply saying a reversal. Okay, maybe like to this level, maybe this level, and then a fall. Okay, that's it. Then comes the volatility. Volatility is increasing. Once again, the volatility, it is increasing on the daily chart of the S&P 500. So the S&P 500 is bearish through the Bollinger Bands. The S&P 500 is bearish through the moving averages. The SP 500 is bearish through the Ichimoku. The SP 500 is bearish through the MACD. The SP 500 is bearish through the stochastic RSI, and then all other factors. Okay, once again, the MACD and the stochastic RSI both are bearish, both are in the same direction. What it means? That this is the direction of the S&P 500 or the entire stock market, and the Dow Jones and the Nasdaq. So guys, what we have seen on this, the daily chart of the S&P 500, that the SP 500 is heavily bearish. The S&P 500 is heavily bearish on the daily chart. Now guys, now comes the time, okay, to deduce the probable movement of this, the S&P 500, that how the S&P 500 is going to behave in the coming week, okay, in the week of September 26th, that is from Monday September 26th to Friday, that is September 30th. So we know the support and resistance levels, okay, and let me mention, okay, the critical levels, okay, that will be there for the coming week. This is 3840, okay, not just 3840, this is the zone of 3840, and the zone of 3840 is from 3830 to 3850. Okay, so let me create the zone. Okay, this will be the zone, sorry, this will be the zone. Okay, this will be the zone. So this will be the zone of the 3840. This means that any reversal should be, will be, must be restricted to the 3840. Anything above 3840 means manipulation. Okay, forget about technicals. Anything above 3840 means manipulation, nothing else. Because only and only the manipulation or the manipulators, okay, now have the power to bring it up, to help it breach the 3840, nothing else. Okay, the technical indicators will never support, okay, this the upward movement, okay, that is breaching the 3840. Okay, because we have seen that that on this the S&P 500 daily chart, that the S&P 500 technically, okay, on this the daily chart, it is bearish. So the SP 500 is technically bearish on the daily chart, right? This means that technically a reversal up to this level is possible. A breach, a heavy breach of this level, that is not possible. Okay, this means that if there comes a reversal to this level, and if you see that the S&P 500 is struggling here, in that case, feel free to short, feel free to buy puts, because eventually it is going to come down. Simple, no rocket science. Okay, this means this is the point where the S&P 500 is again going to form a lower high, just like it did on, okay, at this point 4110. Okay, this was the lower high, it was coming down lower high, it is coming down lower high, and then down. So I see last week, okay, through the technicals, because of this the bearish angle thing, okay, we knew that on Monday means the last Monday, okay, there will be a gap down open, okay, and also we knew the color of the candle, okay. But this week, okay, there are things, okay, that are not giving a clear confirmation whether we are going to see a gap up open or a gap down open. Okay, so I will not comment, okay, for this the coming week whether there will be a gap up open or the gap down open. Okay, now let's talk about, okay, the other movement other than this the open, because I will be able to confirm you this the movement, okay, the gap up or the gap down open, okay, in the American markets only at least 6 to 8 hours before the open of the S&P 500, before the open of the stock market. Okay, when the Asian markets will be open and when the European markets will be there, okay, then only I will be able to give you confirmation. So like so if you are my YouTube member, okay, then I will give you the pre-market update and I will tell you what we are expecting, and immediately upon open whether we are going to see a fall or whether we are going to see a retrace and everything else. If you see, this is the stochastic RSI, and also we have the in the stochastic RSI we have the K channel, and we have the D channel. Okay, in case of the indices, whenever the K channel hits the 0.00, in that case it creates a situation for a reversal, And this is what I told you, that I will discuss this, the K channel. Whenever the K channel is absolute 0.00, it creates a situation for a reversal. Okay, this is true. Okay, most often it happens, but sometimes what happens is that we also need to wait for 1 more day or 2 more days until and unless both K and D become absolute zero. That is a perfect situation, that is a perfect scenario where we can say yes, now we are very much confident, we are heavily confident there will be a reversal. And if you watched my technical analysis for the week of September 6th, then I told you this is the Nasdaq. This is the Nasdaq Composite Index. So I told you that the Nasdaq is giving us absolute zero readings for 2 or 3 days. This means now there is a very, very heavy probability that we are going to see a retrace. We are going to see a retrace because Nasdaq is giving, okay, these are the readings for these are 3 days. Okay, absolute bearish. And I've told you that the Nasdaq, okay, sometimes it acts as, okay, an indicator for the Dow Jones and for the SP 500, that what is going to happen in the SP 500 and in the Dow Jones. Okay, so this is what was with the Nasdaq. So Nasdaq, this is something that we have not seen in years, okay. So now in case of this, the S&P 500, as of now we can anticipate a reversal, but this reversal will not be heavy. Okay, let me repeat, this reversal will not be heavy because only the K channel is zero, the D is not zero. So this means that if there comes a reversal, if the reversal is restricted to again 3735 immediate resistance and then it comes down, in that case the K channel will remain zero on Monday and the D channel and the value of the D channel will further decrease. Okay, and in that case, if on Tuesday if there comes again the same movement or a bearish movement see what I've told you that sooner or later the S&P 500 is going to follow the Dow Jones, and what, okay, and this thing that the Dow Jones, okay, it has breached its previous low. This means that the S&P 500, okay, will also be coming to breach its previous low. Okay, it will be coming to 3630. This means if it comes on Monday or if it comes down on Tuesday, then it will create a situation, I think, on Tuesday, okay, that there will be absolute zero, okay, 0.00 and 0.00. So that will be, okay, an absolute situation. So if you are my YouTube community member, okay, so I will immediately update you and I will immediately tell you, okay, now that kind of situation is there, whether it's Monday, whether it's Tuesday or Wednesday, and accordingly you can book your profits or you can enter bullish. Okay, so this is the thing. Okay, so the upcoming movement, it will be dependent on, or it will be heavily derived by the K channel. Okay, if on Monday if there comes an upward movement, then wait and watch and see if this level 3735 is able to hold or not. Okay, if it is able to hold, if the S&P 500 is struggling, this means it is going to come down. And if it comes down, then the support levels. However, we are talking about the K channel. If it comes down, then the K will remain zero, the D will come down to like 3, 2, okay, or like that much. Okay, and if it comes down heavily, in that case on Monday itself, on Monday only, okay, the D channel will be the zero, it will be zero. Okay, so accordingly I will update you, okay, through this the daily analysis. And if not, see the chances of seeing a D, the chances of seeing the D channel, okay, hitting zero on Monday are less, but hitting zero on Tuesday are extremely high. Tuesday or on Wednesday. Okay, so maybe Tuesday or Wednesday, it depends. So if that happens, in that case there will be a heavy retrace back to the 3840 and then a heavy fall. Okay, so that's the one condition. The second condition is that if immediately, okay, if there comes this the heavy retrace, in that case, okay, this situation will not be there, the K will become non-zero. The D is already non-zero, K will become non-zero, and now the S&P 500, it is not coming down, rather it is moving up. No problem. Let it move up, do not FOMO, okay, do not fear, do not participate in the rat race just like these the retail traders. Okay, so see again the retail traders, so there are a lot of problems with the retail traders, and that is the reason, okay, they are losing money. Now if on Monday and Monday onwards, okay, if it moves up without giving a downward movement, then that will be a perfect situation for us. Then that will simply open an opportunity for us, because it will then move up. Let it move up, let it move up, do not worry. Now you need to wait and watch whether it is holding around 3790 or not. If it is holding around this, the 3790, okay, in that case you can see that the fall will be from the 3790 itself, not from 3840. See, 3840 is the extreme. Okay, so we have 3735, we have 3730. If you see that the S&P 500 is struggling, okay, on these levels 3735 or 3790, in that case that's it, we will see the fall thereafter. Okay, if not, then we have the 3840. Simple. Because when the S&P 500 or when this the SP500, when it will be hitting the 3840, by that time the moving averages will also be there, right? So these the moving averages will also be there. Then these so these the moving averages, okay, and these the resistance level. So they will create a very heavy resistance for the S&P 500 or for this the SP500, and then it will not allow the SP500 to move up. Okay, rather it will come down. So the retail traders, they will think that okay, now it is moving up and let's participate. So let them participate, let them lose money. Okay, you need not to. So it will then it will struggle and it will come down. Okay, now yes, now I was talking about this the stochastic RSI K channel. So if on Monday if it moves up, in that case the K channel will become non-zero. The D channel, it is already non-zero. If on Tuesday, okay, then on Tuesday it will further move up. Then so what will happen in that case? The K and D will be non-zero, means that through this means the technical, the stochastic RSI, because the K and D are non-zero, this means that now it has opened. Now the technicals have opened an opportunity for the S&P 500 to come down heavily or very heavily, because now they are non-zero. Non-zero means now they are not supporting any kind of retrace. Okay, so this is how we interpret the technicals, okay, along with all other movement. So this will be the expected movement, okay, for this the S&P 500. Okay, so any retrace will be limited to 3840. Anything above 3840 it will be clearly manipulation, okay, and the or it will be manipulated. Okay, in that case, okay, if you are my community member, means if there comes a manipulation, and if you are my community member, then I will tell you, okay, that where exactly or to what levels are going to work for us, and that you can so you can capture that opportunity, okay, just like you did, okay, here, just like you captured this opportunity here and you made, okay, a lot of money on this day. So through the manipulation, while the retail traders, they will be losing money, okay, you'll be making money. See, the trend of the market, the trend of the S&P 500 is bearish, okay, and the color of the market, color of the stock market, the color of the S&P 500, the color of the Dow Jones and the color of the Nasdaq is red. The color is red. And I've told you that if it moves up on Monday, then it will create a situation, a perfect opportunity, okay, for us. It will open an opportunity for us, so let it move up, not a problem. And if it comes down on Monday, Tuesday, in that case we will have to wait and see, okay, until and unless both K and D are absolute zero, okay, and then they will indicate this is the reversal. So that will, okay, so that again I will give you through this the daily analysis. Now other than that, okay, the S&P 500, okay, has opened, okay, this the door to 3500. Where is the 3500? This is the 3500 that we can see in the next week, or 3400. Okay, so some unusual thing will happen at 3400. Okay, if it comes in this week only, then I will give you this the daily analysis, okay, through which I will tell you. Otherwise it will come the next week, and then I will tell you, okay, the next weekly technical analysis, and also through the daily analysis. Okay, so it has opened the door, okay, for this S&P 500 or this the SP500 to come down to 3000 levels. Okay, now guys, once again, if you have not subscribed to my channel, then please subscribe to the channel and click on the bell notification icon. And other than that, guys, if you want to join my YouTube community in order to trade safe, in order to avoid falling into the traps, in order to make money, in order to foresee the future, in order to see what is going to happen in the S&P 500, Dow Jones, Nasdaq. Okay, so I've given the link in the description of the video and in the comment section, so you can use that link to join my YouTube community, and you are welcome. And guys, other than that, if you have liked this video, then hit like, and if you have any questions that you want to ask, then you can ask your question through the comment section. So comment, And once again, subscribe the channel to get the weekly technical analysis, okay, and all other informative videos. And don't forget to click on the notification icon. So guys, this was my S&P 500 weekly technical analysis for the week of September 26th, 2022. That is from September 26th, 2022 Monday through September 30th, 2022, that is Friday.